Welcome to the Wednesday edition of FreightWaves Now. I'm Emily Zink.
Happy tip of the cyclical cycle day. I'm Chad Prevost. We've got some great cooks in the kitchen talking some Uber freight. We're talking economy and...
But first, we have Kyle Cunningham talking to you carriers out there. Kyle, what do you got for us?
Thanks for that, Emily. I'm so excited to be here. Speaking of cyclical cycles, let's take a look at the DAT National Van Freight Rate Index for the past 5 years and a little bit beyond. On a big macro scale, you can see that June is a very important month for the DAT van freight rate. On 6/22, 6/28, 26, 25, 24, and potentially June 23rd of this year, we've seen a dramatic increase, oftentimes out from underneath the baseline. We have the baseline set here for this graph at around $1.28 a mile. As these rates move up and down with this beautiful volatility, you see that the market conditions rapidly change. Now, what's the cause for these market conditions in the summertime? Number one, statistically, volume is higher. Number two, we just saw the rate increase due to the DOT blitz. There's a theory out there I personally subscribe to that the DOT blitz takes a lot of the junkier trucks off the road, the guys that might be interested in hauling freight for a much lower rate. So when you have less capacity to haul freight at cheap rates, you have rate rises. Now, the important thing to consider is that as these peaks come, the valleys come even quicker. So where we're at today, we could be here, we could be here, we could be here, but we are right here, forecasting an 18.5% increase based upon previous year's volatility rise. We're looking at around 6/23 of this year to see possibly rates at $1.60 a mile. Coming in today at $1.45, that's not too far away. Emily?
Some very positive news coming from Wall Street recently surrounding Uber. Seth Holm joins me now. What is that news, Seth?
Yeah, so last week, all the sell-side investment bank analysts initiated on Uber. We had 25 initiations, and an initiation is basically a long, detailed report where they give a huge overview on the business and what their thoughts are on the stock. And so last week, 25 analysts initiated on Uber. They're very positive overall. We had 20 buys, 5 holds, and 0 sells with an average price target of $60. The big bull on the street is BTIG. They had an $80 price target. It's a $45 stock. And they're really bullish in the fact that they think autonomy can start to bear fruit within the next 5 years. And so what that will do is that will lower those rates when you take a taxi, and they think that will stimulate demand and then reaccelerate growth in the out years.
So we know Uber for Uber, just our ride share. We know Uber for Uber Eats, but Uber is also trying to get into the freight and the autonomous realm. Talk about how that's pumping up the company.
Exactly. So they do a lot of detail on this. Uber basically has, let's do a 30-second overview. Uber basically has 3 main business lines, okay? There's ride sharing. That's about 85% of the business, and analysts think that can grow over the next 3 to 5 years at a 15 to 20% rate. Then the other business, the other bigger business is Uber Eats. That's about 15% of the business. And they think over the next 3 to 5 years that Uber Eats can grow at a 50% rate. So really, really strong there. And the other one that's just starting is Uber Freight, right? That's only 1% of the revenue today, but they think it can grow 85% over the next 3 to 5 years, which would result in Uber Freight actually becoming a pretty big part of the business, about 10% of the revenue, 10 to 15% of the revenue in a decade from now.
Those are big numbers. How do they kind of change the freight game with a player like Uber getting into it?
Exactly. So just to put in context, here's what they're actually projecting. So right now, Uber is at a gross revenue run rate of around $500 million, okay? And so Wall Street thinks that they can get to $4 billion over the next, call it 4 years by 2023. That's an 85% compound annual growth rate. Really impressive, right? And so I sit next to JP Hampstead here, and we were talking about this. We're like, this is very impressive. Like, is there any historical context for anyone else who's been able to do this? So we thought of Echo, which is my chart here. Echo is a really impressive, fast-growing brokerage company. And so we said, well, when was Echo at a $500 million run rate, similar to where Uber is? That was back in 2010. My chart doesn't go back that far. But they've gone from 500 million in 2010 to 2.5 billion, so 25% growth. So analysts think that Uber Freight can do 3 to 4 times faster growth than Echo over the next few years.
And now we're talking with Ibrahim Bayan, our chief economist, about how rates are down across the board. Ibrahim, welcome to the show.
Thanks, Chad. I wanted to start by looking at the producer price index for general freight trucking and long distance trucking. One of the things that you notice here is that there was a severe run up in prices in late 2017 through 2018.
Oh, okay.
But when you get to the beginning of this year, there really was a peak. Like at the start of this year, January, there was a positive number, but since then, these rates have been coming down fairly steadily. The numbers yesterday showed another decline in rates for long distance truckload services. And again, this is a part of a problem that I think the industry is going to have to deal with all year. Now, one of the things that's going on is that there was a significant amount of capacity added on that side of the market during the course of last year. Yeah. A lot of people will look at like truck orders as a measure of capacity. I actually like to look at the employment figures. I feel like the big bottleneck for capacity revolves around like the number of drivers that are on the road. And so here I have employment in the trucking industry and sort of the trends here. And again, you can see this run up in employment all throughout last year, where almost 44,000 jobs were added within truck transportation. But then you get to the beginning part of this year and it starts to stall out. This means that like the appetite for hiring has died down. But the industry is still kind of trying to process all the capacity that was added throughout the course of last year. So
I suppose the good news is that it at least has plateaued and not gone down.
Well, I mean, it's good news unless you're looking for work in that industry.
It has plateaued.
So that's one side of it. There's a lot of extra capacity in the market right now. The other piece of it is that there really isn't a whole lot of demand coming from shippers. I mean, when you think about trucking demand and the demand for freight services and what shippers are shipping, it's going to be your manufacturers, your retailers, your exporters, right? This is what drives freight activity in the economy. And so I pulled up just year-over-year growth in manufacturing, retail sales, goods exports and goods imports. And you can see very strong growth throughout most of 2018. I mean, in fact, you saw multi-year highs in terms of the pace of growth in these different sectors. But since then, it's died down considerably. All across the board, from retail to manufacturing to exporting to importing, all of that activity has died down significantly. And in several cases, you're actually looking at negative year-over-year performance.
And it's been dying down since about September of 2018.
Exactly. So you can kind of think of the peak of the trucking demand in the third quarter of last year, and then it began to die down since then. And so now you're in this environment where manufacturing is negative, which is the blue line here. Goods exports is also negative. Goods imports are negative, and retail is still positive, but it's down significantly from where it was. So there just isn't the same amount of activity coming from shippers as there was at this point last year.
And that is what is happening on FreightWaves Now, right now.
If you like what you see, definitely share the content and follow us on Twitter, Facebook. Of course, you're watching on YouTube. We hope to see you guys tomorrow.